If you are a South African that wants to reduce your tax liability, this is the last part in our series with Kantha Naicker, professional accountant. And Kantha has been breaking down the various tax breaks that we can have and how we can utilize tax and structure our tax in a more efficient manner in order to reduce our tax liability. And we have 4 other parts before this, so please go and watch that, and hopefully this will make a lot more sense after you've watched part 1, 2, 3, and 4. So this is the final part. Kantha is going to cover a lot of the exemptions and the deductions that you have as a South African taxpayer. Let's jump in that conversation with Kantha.
So if you are not a salary earner, or if you're a salary earner and you've got a side hustle or you've got another business that you're doing, you've got different streams of income. So what are the different types of income? You get salary, so you earn a salary, you work for somebody, they deduct PAYE, you've got a retirement annuity, etc., and you take care of your tax planning. You own a business, you are a sole trader, you don't have a company. It's Kantha Naicker Accounting Services, and I operate as that, and I earn income in my own name. I'm not in a company. I don't, and everything that I earn is mine. So the reality is, in that case, all the expenses incurred in the production of that income, I can drop a little bit of an income statement and I can come down to what tax I should be paying. Because I can claim not my groceries and personal costs, but I can claim all the expenses incurred in the production of that income. I can claim my petrol, I can claim stationery, I can claim cell phone, I can claim telephone, I can claim printing, courier, not much more from a service business. If I employed somebody and they worked for me personally, not in a company, I can claim that salary. So I have an administrative person and I pay them 10,000 Rand a month. That's part of what I can claim. So we've now spoken about salary, we've spoken about income from a business. Then you get different, and I said you get different streams of income. I've now received a lump sum and I've invested it. I'm also receiving investment income, interest income, income that I can claim the interest deduction, or I receive interest and I have an interest threshold. And if I earn interest, like the example I gave you earlier in the beginning, if I earn more interest than that threshold, I am taxed on that interest. And that's where the 33,000 savings and all the other tools that financial advisors use to get you to move that income around legitimately to allow you to reduce your taxes. So those are my top 10 things. I want to run through them quickly, just as a refresher. So the first one I said is make sure you get your retirement annuity in place and you speak to your financial advisors and you contribute at the right level. There's no use earning a 80,000 Rand salary a month and contributing 1,000 Rand retirement annuity. It's not going to serve you for retirement at age 55. Neither it's going to give you the tax saving benefits that you require. So your financial advisor will come in there. The second thing is making sure that you split you move your investment, your lump sum investments around to look at how you earn your interest. That 33,000 tax-free savings account is a wonderful way to do that, and it can be used obviously with your minor children and in different accounts to a threshold of 500,000. Then making sure that if you want to give back and you're donating to a registered PBO, and you'll find that list on the SARS system. Go into the sars.gov.za and there's a wealth of information. It's become very user friendly, and so that SARS search button on the top right-hand corner on their website. Make sure you're on a medical aid scheme. If you're on a medical aid scheme, make sure that your medical tax credits are being deducted monthly by your employers. Go back to your payroll person or your HR person and say, I am on a medical aid. You may not be contributing towards it. I contribute towards it on my own. Please ensure that my medical tax credits are going off on my pay slip, or are they going off? Maybe it hasn't been considered. So that's on the medical aid side, and ensure that if you've got somebody with a disability within your family, you have gone and done all of the administrative things required in order to be able to claim full medical benefit on your taxes for that person who's disabled. If you're receiving a travel allowance or if you're driving a company car, keep a logbook. Don't just suck it and try and make up what's going on at the end of the year. Then if you're a commission earner, make sure that you've kept every slip in the book. like I said, you when you're sitting with your tax practitioner at the end of the year, or if you meet twice a year, make sure that you have got proof of the expenses that you've spent money on, so that can be claimed legitimately. Also, if you're a commission earner, try and look at how you would claim business travel. Again, keeping records. And I don't know if you've heard, like, sort of the overriding and then subsistence allowance, one of the most not even thought about allowance, because you travel and you're out of home and you end up receiving this thing. You don't even know you're receiving it because it just gets paid as part of your salary. It may not get handed over cash as you're leaving the office, but it gets paid into your salary because they identify that you've been away from your normal place of rest, or where you lay your head. And that could be foreign travel or local. Make sure you keep the slips. So the overriding thing here is keep the slips and make sure you're keeping your admin up to date. And then if you're a non-salary income person, make sure you're keeping all of your expenses, and so that you can combine and compile your taxes, whether you take care of that business as a provisional taxpayer every 6 months or as an annual taxpayer every year. Make sure that you keep all of those things together so that you can claim as much as you can. And an old rule of thumb, which my dad always says, is from a medical perspective, especially if you are a retired person over 60, and I think this doesn't really matter if you're retired, if you're spending large sums of money on medical costs, so you're on a medical aid, you contribute, but you don't, your medical aid obviously dies within 3 months and you're unable to claim from the medical aid because your medical savings have finished. You're now paying things cash. So you're not paying the big ticket items. Maybe you've still covered for hospital expenses, but certain specialist expenses, etc., you're paying cash. Keep those slips. Insist on receiving an invoice and proof of a receipt to say you've paid it, because it could be in that year that you end up being way over the limits that are required, and you're able to claim that back from tax at least. I know that those thresholds and the percentages have changed quite drastically over the years, but get into the habit of keeping the slips. Because if you don't keep, and it's become a little bit easier with our smartphones. Instead of keeping the slips, if you take a photograph, a good quality photograph, and you stick it into an album, sort of medical tax certificates. So certainly consult a professional, but always make sure that you are aware, and that there's always avenues to ask questions, right? Yolanda's got some amazing tips on her channels. I've seen some of the stuff she puts out, and it's a good thing to listen to and then sit back and say, now, how do I research this? Do I need to go speak to a professional? Because I've got a very specific issue, and it may be very unique, and you can't maybe find the answer very quickly.
Okay, so that was Kantha. If you want to reach out, I'm going to have Kantha's details maybe below me on the screen. I'm also going to include her details in the description down below. You can reach out. Kantha runs her own practice in Johannesburg and Cape Town, and obviously with this kind of work, you can consult anywhere, right? So give her a call if you want professional help in terms of your taxes. And if you see some of these investments there, things like RAs, your interest exemption on your investments, tax-free investments, and also to utilize your capital gains tax on certain types of investments like your ETFs and your unit trust, I'm the person to talk to. So you have input here from a financial advisor and an accountant. And so you got some comprehensive information right here. Right, so go back and watch the series if you haven't, and hopefully we'll have more of Kantha in the coming tax season.